Hey, good morning, good morning, good morning. It is Saturday and February 10th. We are celebrating, absolutely celebrating this week. We have a new sheriff in town. Let me flip this screen over. And as you can now see, the ranges have been incredible, incredible in the market. Um, Huge, huge, huge bars. And the ATR just astronomical 107 Friday for the ES on NASDAQ 291.5. I mean, we've look at these weekly 5-day ranges compared to the prior month, just double, triple that range. So let's take a look at the chart and see the context of what we're looking at. I had my uh, performance coach, John Hoagland, spoke to me on Friday, and we were talking about, the market context is what you have to have first before you can start trading. Yes, even I can have a performance coach. So the last few years, because of the financial crises, the Fed chairwoman, Janet Yellen, was propping up the market. So every time you got at a certain level, the market would step up, meaning the central banks, pension funds, all your big time traders would step up to the market, and that's where they would enter. So today we came right down to the 200 EMA and bounced on all of these markets. So they're still stepping up and propping up the market, but the volatility and volume have picked up exponentially. We've blown through these prior ranges. So the new sheriff in town came in and said, you know, enough is enough. The markets can handle themselves on their own, and just like the cryptocurrencies did, you figure out that you've got the reins back, and the first thing they did was they sold it off. So now we'll stabilize, come back to the middle, 6,600-ish, and start looking for trading opportunities in that direction. And so once you have your context, which means volatility both ways, we can approach a trade plan. So given this higher volatility, you've got to have an approach to the market. And my standard approach has always been with my MACD, wait for price to break out of a range, like right here, because this is your sweet spot. If you're a trend trader, you want something below the prior day low and breaking that range. So when that, condition occurs, you recognize that you can trend trade and you trade in that direction. Now, what happened here was you had the dip buyers come in and they bought this retest um, and took it back up, and you can time that. Um, this, excuse me, this little green booger needs to move there. Okay. So when you get that 15-minute bar close and you know that this test has been completed, I actually took that up, I believe, live, traded that in the market on Friday because I recognized what was happening, and as soon as this bar closed, I was trading it up. So what standard the doji in the bounce box. So once that doji closed, that gave me my permissive to start trading long, and so that's how I knew to turn the recorder on. It just wasn't happenstance. Sorry guys, I have a little bit of trading snap. So that's what Hoagland and I were talking about. You have to know what you're trading and how to trade it. So you can have an approach either through the HiLo2, taking these pullbacks, and especially ones at like an average or at the bottom band when you're trading directionally. But there's another approach also that I have had a lot of fun with trading this week, and this is what I'm going to be trading in a new combine that I just started. Um, and that is these trigger threes. So that same concept on your daily, when did the big boys come in and buy? They bought at a certain level, right? And they just waited for that one opportunity. So when my market condition matches, let me change my monitor here. Because this is what my trade desktop looks like. I have my monitor. I know what the markets are doing. I see my net change. I know where my opening is relative to the last close. I have my 15-minute momentum and my 3-minute momentum. Remember, that's how I knew when to time that trade, because you're waiting for that 3 to trigger off. Once that 3 locks in, then you have your permissive to go in that direction. So I'm like a spider. I'm sitting there waiting. There's my web, and it's right there. And so that's the one I want. This is my stop box. I don't like sitting right above a major support resistance level. I tell you that. I probably would have tucked that below there. So it's like, I guess I have a little bit of discretion. I wouldn't park my stop right above major support resistance, and that's the prior day low. So I would have tucked it below it. But here is your trigger, and then you take 2, 3, 4, 5, 6 to 1. At least 2. So how you want to trade that and divide it up is up to you. If you want to take more triggers, I can give you more triggers. There they are. I can give you 3 different triggers. And the same concept would apply, though. You would have to figure out your risk for each one. And you would need a wider risk for the first trigger. In fact, I wouldn't even suggest trading the first trigger. I would trade 2 or 3 because of the level of risk. And that way you would have more of a higher probability. So you can trade 2 and 3, or just 3, or just 2. But you'll figure it out. Or you can trade them all. What the hell, right? So the key is knowing, like John Hoagland said, context. What are we doing? New sheriff in town. So it's the ranges are busted wide open right here on the market analyzer. They are just screaming double the prior month. Double the prior month this one week. So and then the last day of the week is the what, again, just killing it on those ranges. So um, have a plan, have an approach to the market. It needs to be fine-tuned. You need for consistency and to quantify your approach. You need something with a consistent entry location and profit target and stop loss so that you can see how you're doing. I also trade to levels a lot. If you've been in my room, you can see that we draw a lot of support resistance levels based off of prior pivots, and that's the higher time frame pivot. I'm always looking at my daily, weekly, 240-minute chart, 60-minute, 15-minute pivot levels, and seeing if I can, because the algos are tied to those levels, those highs and lows. And so we want to take them in the direction that we're going. So that's the key. That's what you call trend trading in the modern day. So we're going to take those 60-minute lows anytime we can get a retest, right? All right. So come see us in the trade room. Check out our software. If you just want to chat about trading in general, go to the website. There is a new tab that says Tutor Sessions, and we are open, and we hope to talk to you soon. Thank you so much. Y'all have a good weekend.